Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, November 4th, 5:30 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, and it is election week next week. Expect some volatility. And we'll update the world famous 21 over 21 leaders list. Let's dive right into it. State of the market, we continue to be in a correction from the standpoint that we are still bouncing from a bear market, still down over 20% on the year, but in a hanging by a thread short-term uptrend. We haven't broken the low of the follow-through day, and despite the nasty look to the S&P and the NASDAQ 100, we actually have market leaders holding up pretty well. No shortage of leaders for the 21 over 21 leaders list. As you can see, that's why we've still got them flashing bullish uptrend, despite the fact that the sub arrow is showing red. Short term, failure at the 21 on the S&P. Actually, we closed right on it today, but the NASDAQ 100 firmly below it, so we're neutral there. We do have the Dow small and mid caps above the short-term 21-day exponential moving average. Medium term, above the 50-day moving average, same situation. We've got the Dow and small caps and mid caps with a first close above it today. Failure this week at the 50-day for the S&P 500 and the NASDAQ 100 never got there. Long term, closed back below the 200-day moving average on the Dow, so all 5 of the indexes are back below their 200-day moving average. So what happened today? This has been an exhausting week, and it was an exhausting day to cap it off. Volatile wide range bounce. We had 3 days down, starting with the day before the FOMC decision, which had a massive bull trap where we took off to the upside on a dovish statement. Powell came out and just put the nails in the coffin to the dubs, got very hawkish, and the market had a massive negative reversal to the downside on Wednesday. Follow that up with more weakness on Thursday, was day 3. Today we bounced at 3,700 support. So wide range volatile bounce day. Looking at the individual components, G6 growth stocks. I talked about some last night that just got broken leaders, but you think they can't go lower, they can. Handful down over 20%, broken former tech leaders. The G6 fractionally just barely up today. This is our finger on the pulse of the growth environment, barely positive, up 0.04%. S&P 500 gapped up 1.6% on the jobs report that had mixed. It was really a mixed bag. In fact, there were more jobs filled than were expected by a pretty significant margin, and the last month was upped also. But from what I read, stagnant wage growth was the reason for the optimism. If you're not growing your wages, the theory is you're not going to spend your money. That should tame inflation. I don't know. There's a lot of crosswinds in here, but maybe the bottom line just is it was 3 days down and it was time for a bounce. But the S&P opened 1.6%, gave it all up, rallied again, gave it up, rallied into the close, up 1.36%. NASDAQ 100 up 1.6, Dow up 1.3, mid caps up 1.6, small cap Russell 2000 up 1.1, global diversified 60/40 stock and bond up 1.4. In-house, we lagged today as our oil holdings pulled back, and the hedge that we had, which turns into a short as long as we're below the 21, still below the 21, but gave back some on that today. We booked a small profit on that, so we're still holding half of it, but down 0.27% on the day. We'll go through the tail of the tape and the updated 21 over 21 leaders list, but first, let's talk about, and I'm trying to streamline this, let's talk about what we do here at Revere. If you're new to us, here's a chart of the S&P 500 to kick it off. So at Revere, we're a fee-based only, fully transparent, conflict interest free, fiduciary that's registered, a registered investment advisor. We're registered with the SEC. Our flagship portfolio is called GROTECTION, and it's designed to grow assets during market uptrends and protect them during market downtrends. We manage individual client accounts using trend following rules based on 3 time frames, like I showed on the prior trend gauge, and the action of leading stocks when the market is healthy. In an ideal uptrending market, such as we had last October and November, we will be fully invested in the market. That's when the 5 major indexes are trending above all 3 moving averages and growth stocks are acting well. In a neutral market, suppose things start to go sideways or pull back, the market will take us out of our exposure, will reduce exposure. And if we start trending lower, meaning the slopes of the lines of the short and medium term rollover, we will significantly reduce exposure. And then in a worst case scenario, if we break below this black line, the long-term indicator, the 200-day moving average, we turn to a maximum defensive posture. As history shows, this is the time that we are at risk for severe bear markets. Here's the last 13 bear markets. You cannot afford to go through one of these if you're approaching retirement. That's why we make risk management our number 1 priority at Revere. If you take care of the downside, the upside will take care of itself when the market turns to a more healthy posture. All of those severe bear markets take place below the 200-day moving average. So we get out of the way. Big losses can be avoided with a couple of simple rules. And then when we get back in, our assets will be compounded from a much higher capital base. And re-entry occurs using various signals that reflect improved short-term risk-reward environment, such as when we get back above the 21, when we have a shakeout. We have several rules to get us back in. And if you're interested in this approach, reach out to me. Email don@revereasset.com. You can also email dan@revereasset.com. My partner, Dan Stewart, he's a CFA, fully knowledgeable on all things related to the investment world, or you can call 855-REAL-WEALTH. That's 855-732-5932. So let's take a look at this S&P 500 now on a 5-minute chart. You can see here's the volatility that was initiated by Powell's first the statement back on Wednesday, then the sell-off after he turned hawkish. Another gap down on Thursday, but really we stayed in a fairly tight range, but it was the 3rd day down. Then today we gapped up after the employment report, sold off immediately. Over a 3% range today, which is not common in the S&P, especially with the VIX coming down today. Very puzzling action there, but the market is a puzzle that's always in need of solving. But nearly a 3% range today, a little less than 3. 37.80 down to 37.30, up to 37.96, down to 37.10. And look how this 37.10-ish area held like a rock after 3 tests. And that's basically where we shook out yesterday morning below 3700, 37.10, down to 36.98, and then held on any pullbacks. We held the pullbacks today. So really that's the line in the sand right now, 3700 to 37.10. The more you hit on this support, the weaker it gets. So we've got to be wary if we test it again for a breakdown. And then you see the rally into the market close, getting us back to positive on the day. That's your S&P 500 note. We've got a very tight range here with the 50-day moving average, the 21-day moving average, and the 8-day moving average, all less than 1% from each other. So lots of resistance there to clear. Let's go to the NASDAQ 100, the weakest testing. We're really at the bottom of the range before we were below. In fact, actually we're right at the range where before we had the slingshot breakdown and move higher. But note, we never touched the 50-day moving average, and the slope of the 21 is pointing down, and in fact the 8 is below the 21, the only one of the major averages. Up 1.6% today, despite Apple barely being negative. A lot of volatility in Apple today, an $8 range, which is almost 4 or 5%, well above its ATR. Tesla down 3.6% today. Nobody wanted to touch that. So the weakest of the indexes is the NASDAQ 100, all being driven by weakness in the major tech stocks. Here's the Dow. Multiple closes above the 200 last week and earlier this week, broke back below it on Wednesday, rallied up into it today, but failed. We're at 32,400, just 167 points away from the 200-day moving average. That's a key that we'll be watching next week. Note, we've got all the stochastics rolling over on the major averages, so that's a bit of a headwind also. Let's go to MDY, mid caps. They've been outperforming over the last 2 weeks, as you can see from the relative strength line. Got back above the 50 and the 21 today, so we're trapped between the 50 and the 21 and the 200. Stochastic rolled over also. IWM got back above the 50 and the 21, below the 200. Stochastic rolled over there also. Now let's take a look at the puzzling VIX on a day. Volatile day like today, even when the market was down big today, the VIX was also down. You can see it down 2.65% on the day, below all the moving averages. Slope of the 50 is trying to roll over. The 200-day is flat. The 21 is pointed down. We're very oversold on the VIX, however. In fact, we're pinned to the bottom. You can see going all the way back to January, we haven't been this oversold on the VIX. It's acting kind of strange. Definitely something to keep an eye on, and expect volatility with the elections absolutely next week. That's why we continue to play it light here at Revere, that and because of where we are in the indexes relative to their moving averages. So there's the VIX. Let's take a look at the 30-year bond, TYX. Interest rates were up today, up 2.26%, bounced at the 21 for now. Here's the 10-year TNX, also bounced up 0.78, but the shorter term ETFs like IEF, which is the 7 to 10 year, this was actually up today, meaning rates pulled back. Actually, this wasn't up. I'm sorry, IEF was down today. IEI is the short term one. The 5-year, yeah, there were 3 to 7, right? So this was up, meaning rates, where the short-term rates were down, everything below 7-year today. And let's take a look at the dollar. This was a big story today, and one of the reasons why Europe rallied on the day. In fact, FEZ, the Euro Stoxx 50, up 5% on the day. Why would it be up 5%? Let's look at this really quick. FEZ up 5%. Why? And in fact, it broke above recent support because the dollar just taken to the woodshed today. This looks like an island top, also called I think an abandoned baby, maybe, I don't know, there's all kind of weird names, but you don't normally see a gap up like this and then a gap back down and leaving 2 gaps unfilled at the top and at the 50-day moving average back below the 21. Strange action on the dollar. We got to pay attention to this because dollar down means stocks up. But dollar down had also been in sync recently with rates up, and that wasn't the case today. Rates were up while the dollar was down, at least on the long end. So several conflicting signals there, and when you get a big move down in the dollar like that, you're going to get a big move up in gold. You can see gold breaking above the 50-day moving average today, up 3.7%. Gold stocks, GDX, up over 10% on the day, and silver up over 7%. Big move by the metals, all driven by the big move down in the dollar. Let's take a look at Bitcoin. Bitcoin futures ETF, BITO, up 4.5% today. Let's go to that 60-minute, and you'll note we closed above 13 today. Got above it early, pulled back, closed back above 13. This is a breakout for Bitcoin. Above this 13 level. It's hard to see on this chart, but going all the way back to the beginning of September. So a breakout, this is a big flag is what it looks like now, will have been put in here, and then a breakout from the flag. Remember, flags are set up, they're a consolidation, and normally you resolve in the direction of the primary trend, which is the flagpole in this case, and that's what we did today with Bitcoin. So big move there if you're a Bitcoin player. So where does that leave us? Going into next week on the S&P 500, we're right on this tight area of resistance, the declining 50, the declining 8, basically flat 21. We closed a point below the 21 day moving average on the S&P 500. That's a big area to look at. And for now, we're holding the bottom of this range yesterday. 3,700 to 3,710 is a big area. See what happens when it's tested. Normally, when we've had inflection points this year, such as a big move down, like we did on the Fed, there's been follow through to the downside, but we didn't see that over the last 2 days. In fact, we basically closed 10, 11 points above where we closed on Wednesday. So definitely something to keep an eye on there. Next week, I'm kind of expecting some chaos because of all the political shenanigans going on in the country, elections, election fraud, not being able to count votes on the same day. I don't know what's going. Sometimes I think we're a banana republic. Anyway, let's go to the tail of the tape and see what's changed. We did change this technical to positive. The dollar with this island top, gap up, gap down, put call at 1.02, VIX down 3%. If it gets below 24, that's normally a tailwind for stocks, but we're so buried on the stochastic to the bottom that a bounce seems very inevitable on the daily chart. Fear and greed at a 58, that's mild greed. Bull case hanging on by a thread, you can see that's in yellow. News, I already talked about the jobs report. Wage inflation supposedly stalled. It was the reason for the positive move, but then again, it may just have been a bounce after 3 days down. Day count from down 3 to up 1. Expectations coming into today were negative. You could say today's neutral with the bounce after 3 days down, stall at the 21. We spent the day between support and the support resistance areas on the S&P and the NASDAQ 100. Oils led today. Gold, silver, and gold and silver stocks up big time. K-Web up as the continued chatter is for China to back off of its COVID zero COVID policy. EEM, emerging markets, up 4.2% on the day. SOX was strong. XME was strong, driven by the precious metals on the downside. TLT, meaning long-term rates were up. The dollar down big. That's really the story of the day. That was an outsized move to the downside. Biotech also weak. Software and cloud demolished today. Cloud stocks down over 3%. Software down 1.59% on some very weak action, or based on the reports by several broken leader software stocks yesterday. ITA recovered during the day, so we can take that off the downside. Current holdings, we came in with PI, STNG, LNG. I told you we sold half of our SPXS, and we added today to the big cap biotech ETF IBB. Let's show this, and I will show why we added to it. The top 5 holdings in this all have good charts and had excellent reaction to earnings and have some catalysts. Note the relative strength high before price at the same point last October. Price still below, last August, early August. Price still below there, but relative strength above there. So big cap biotech, and you can see the slope of the relative strength line very definitely being accumulated while the market has been correcting. The top 5 holdings in IBB make up 35% of it, and they're all good charts. First up is Gilead. Big gap up on earnings, 5-day consolidation, follow through to the upside. This is exactly what you want to see when you buy one of those earnings gaps, is follow through within 5 or so days, and you got it today with Gilead. Amgen on generally a weekday for biotech. IBB just barely up, and the small cap biotech XBI was down over 1% today. Amgen, good reaction to earnings. Initially sold off, but held this 260 area. Massive support on 260 here. Bounced off of that, finished at the high of the day. So good turnaround there. Vertex, this has been on the 21 over 21 list for a while, continues to trend sideways to up. Regeneron, REGN, kind of choppy, but another shakeout on its earnings report and is close to the top of the range the last 2 days. And BIIB, they've got the Alzheimer's drug going on, big gap up on the story there. Positive reaction to their earnings near the top of that range. So those 5 make up 35% of the big cap IBB. So that's why we bought that today. But so bottom line, that raised that and the selling of half of SPXS for a small profit, upped our exposure to basically the equivalent of 14% of the S&P 500. So still playing it light. Bottom line, volatile, wide range bounce after 3 down days, right on the 21-day exponential moving average, which is trending, which is flat on the S&P 500, and lost the 50th day as it continues to trend lower. So that's the story for this week and next week. Now let's take a look at the 21 over 21 list. And as always, we want to talk about what we punted out and why we punted it out. 6 stocks left. There were easily 25 that wanted to take their place. HLIT was a holding. We got stopped on that, couldn't get back above the 21, negative reaction to earnings. So that left. Another big disappointment, something we got stopped on, Netflix. This has just been down for 8 straight days, broke the 21, broke the 200 after some very nice accumulation and a move higher on its earnings report. Big disappointment. The market is a never-ending puzzle. LHX, big positive move off the lows for earnings, and then 5 straight days of sell-off. We got stopped on that earlier this week. That taken out. WWE, negative reaction to earnings. Gap below the 21, did hold the 50-day moving average though. Enphase we took off in favor of another, in favor of the leading solar stock, let's say that, but don't really like the way Enphase broke below the low of its earnings gap up day. And Vertex we took off because we're going to replace it with an ETF, which we don't usually do here. But this ETF representing 5 of those biotech stocks that could all be in here, I figured why pick one? Let's represent it by IBB and keep a track of what's going on with big cap biotech, which looks much better than XBI, the smaller cap biotech. Note I have, it's tight, but it's not, look at the relative strength line, basically flat. Compare that to IBB big cap, which has been trending higher over the last 6 weeks or so. So don't usually do it, but we added a biotech. Next edition, Caterpillar. Gap up on earnings. Again, this is just exactly what you want to see. Gap up on earnings. If you don't catch it right away, wait for the shorter term moving averages to catch up. That's what happened yesterday, with the 8 EMA touching the bottom of the range. Blue ball, meaning relative strength at a new high, broke out of that resistance area. Still not out of the base, but this looks pretty good. Caterpillar. I know a listener out there that's a big fan of it. Next up, Arista Networks. Good reaction on its earnings, but closed initially a gap up and closed at the low. And then on its earnings report, closed at the high. 2-day pullback on lighter volume. Note the volume patterns are good here. And then a big upgrade this morning that the market really embraced. It held this 7% range all day long, despite the market pulling back. Let's look at a 5-minute chart on here. Initial move up, pulled back. Pretty tight action though between 133 and 129. Just didn't want to give it up. So ANET looking pretty good, and again still hasn't broke out to new highs. So a little bit of resistance here in this 133 area from back in the mid-August. Next up, Lockheed Martin. This replaced LHX. This is really the stock that got it all, that got the money flowing into the sector with this big move up on earnings after a big shakeout. 8 or 9 consecutive up days, now putting in a little bit of a handle near the top of its range. The ADMA caught up to price action and it bounced there today. Looks pretty good. Arch Coal. Coals have had a pretty good week. Move up on earnings. 5-day consolidation, moved out on it. Again, that's what you want to see with the positive reaction to the event. And then First Solar taking the place of Enphase in here. By far the leading solar stock. The rare Second day higher high on volume. You don't ordinarily see that. Um, and it was just a 1 day delayed reaction, and everybody decided to buy it on Monday. I noticed the relative strength right off the bat. If I was a little smarter than I am, I would have bought it, but I did not. Okay, so here's the remaining stocks that were on. MEDP, just not making any progress since its earnings gap up, not breaking down, hasn't broke below the low of the gap up day, but not making any progress. PI, we own this, just going sideways for 6 days. They did file what's called a shelf offering, which means in the future they can do a secondary, which would be a minor share dilution. That might be a reason for the weakness in it not moving out, but still optimistic about it, but it needs to hold the 80 MA in today's lows. Interactive Brokers consolidating near the top of its range. Constellation Group consolidating after its breakout. AEHR, we got shaken out of this week, but it reclaimed the 21 by the end of the day, despite really, it had 3 bad days off of a poor reactions by customers Wolf and ON. ORLY, O'Reilly, all the auto parts are working very well. You see it's holding its gap up. Texas Roadhouse continues to trend higher along the 80 MA. STNG, we own this, move out on earnings and consolidating to moving higher along the 80 MA. Hess, near all-time highs, consolidating. Steel Dynamics, nice pullback, 1 day below, 2 days below the 80 MA, moved back up today. Putting in a flag after its breakout. ExxonMobil continues to be a big leader in oil. Eli Lilly, shakeout to earnings, bounced right off the 21-day exponential moving average, would have been a good low-risk entry, now up near the top of its range. Dino made a new all-time high and reversed today. They've got earnings next week. NBIX Biotech moved out on earnings, consolidating sideways for 3 days. Cheniere reported earnings yesterday, a day delay in selling. Actually, initially it sold off on earnings and held to 21. I thought, oh, big deal, it's all good. And then it broke it today. We still had enough profits in here to be able to survive this. Ideally, your risk is always to the 50-day moving average. You can see it went a little bit below that, but then bounced right into the 21 by the close. And that is your 21 over 21 leaders list, and that will wrap up this week's big show. So as always, feedback, Don at revereasset.com. Remember, it's not how much you make in the market, it's how much you can keep. And I'm going to go watch the Weird Al Yankovic movie on Hulu, and hopefully get a few laughs. So wrapping up the week ending November 4th, this is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.